Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for November 28th, 2021. Hope you guys and gals are having a great weekend. I hope those of you that were in the United States had a great Thanksgiving holiday with your family and friends. And if you're in Europe or Asia or anywhere else that you might live, I hope you enjoyed, some rest on Thursday. But then Friday happened, and we got a lot to talk about because the price action was quite crazy. We got so much to talk about going into this next week. We got so much to talk about all the key levels that are being tested or broken right now. So don't go anywhere. But before I get into all that, I need to talk about ForexAnalytix. If you haven't tried ForexAnalytix, it's only $1 for 10 days. Try it out. The reason why I say this is because you can come in and listen to our free webinars, right? Our free webinars, you got the F.A.C.E webinar, you just click right here, or you go down below, click on the link below, and you can get into our free, we do an hour webinar every single day. You can kind of get my update, the rest of the team, how we're feeling about the markets that day. But really, if you want to dig deep, try out ForexAnalytix because it's only $1. Whoops. But for that $1, you get all the rest of the webinars. Sorry, I meant to go here. You get all the rest of the webinars. We do a lot of private webinars for ForexAnalytix subscribers, European crossover, morning edge, daily roundup. Plus, you get to jump in the chat room. We probably have the most active chat room in the currency market in the world, right? If you look through our chat rooms, here's what our chat room looks like. This is the general chat. We have like the trades room where we're putting trades. You have Forex Flow live room. This is from Ryan and his team that came by. Became part of ForexAnalytix from the UK. You got our news and research room where people post up headlines or certain research pieces from Goldman Sachs or wherever they get them from. And then we have a Spanish chat room as well. So make sure you jump into our chat rooms while you're trying ForexAnalytix. It's only $1. Now you decide to stay with ForexAnalytix, you get the app, you get all the webinars, you get the chat rooms. It's a great community. And you get all the advanced analysis. Now, if you decide to go, you just want to go with the light version for $19 a month, that's fine. You still get the mobile app. You still get to listen to all of the live webinars that we do. You just don't get the chat room. You don't get the advanced analysis. But at least you have mobile apps where you have notifications as things are happening. You get to listen to all the live webinars. I'm broadcasting myself personally like another hour and a half throughout the course of the day, giving my updated thoughts on the market as it's moving, and it's exclusive for you. So make sure you try it out. Now, I am going to talk a little bit about this last week because, here we are on, and by the way, this is the ForexAnalytix platform, right? You have calendars, live squawk, headline news as it's coming out. You get news flow. This is some very, some of it's shared in the public on our Twitter feeds. Some of it is not, and it's exclusive to our community. So, yeah, check it out. So much to do here in ForexAnalytix once you're inside the platform. But I want to talk about, and I'm going to go to live charts because everything's being updated over the weekend. All the analysis is being updated. I want to talk about the S&P because, here we are. Last week, and the markets were looking fine. You have to minus the last candle, right? Minus the last candle, the markets were all held up against the 161% extension of the September high to October low, right? That range, we were up against the 161% extension. Everything's fine, and then the holiday hits, and on Friday, the market starts getting worried about this new COVID variant. I forget. What is it called? What is the name of it? Is it called like Omicron or some bizarro name? I forget what the name is. I was reading a little bit about it and I was like, yeah. But the thing about COVID, and you guys that have been listening to me daily already know what my stance is here. But I don't think the U.S. is going to be shutting down. We've been there, done that, realized it's not really good for the economy to shut down. Worst case scenario, we might be wearing masks more, and maybe there's a couple, few little cities that or maybe counties or something that might limit activity. But really, the economy is going to stay open. But that's the U.S. And I think the bigger worry is what happens with the rest of the world. Does China shut down for a few weeks to cut off the variant? Does Europe, shut their borders again? There are things like that could happen, and those are the wild cards. And I think that's what the market's kind of freaking out on. Now, technically, high to low, 161% extension. We rejected it. And we had a bull flag pattern. You actually have to remove that now, right? You have to remove this and say that is invalidated. We broke through 46.25. If you were, last week, if you were doing analysis with me, you knew that 46.25 on Wednesday was really key support. We severed through that on Friday. So now the next level of support is going to be 45.50. Now, I'm like you. I'm going to be watching this level very, very carefully. Whenever you see a key support or resistance level, you have to realize that, we could be on either side of that by a few points. It's not, support and resistance is not an exact science. So we have to be really careful about saying, oh, we're below it, so now it's time to get short, or, hey, we're holding, we never even reached it, so it's time to get long. You just got to realize that this is going to be a zone. This is going to be an area with a lot of support. Okay, so realize that. So what we're gonna zoom in a little bit on the S&P. I want to give us a little bit more granular analysis here, because I want to make sure that we're really all looking at the same thing. So if you go from the low now to the high, and you take the 38% retracement of that, it really comes in at 45.60. What is that? 45.63. So this, if I have to be a little bit more granular on the level of support that we're looking at here, it's going to be the 45.60 to 45.50 level. I think that 15 S&P point area is going to be really important. Now you look on an intraday basis, we're probably a little oversold. And you know what? When the market reopens on Sunday, are there going to be traders that, have the opinion or have the opinion of me and say, that was a little bit of an aggressive move. I don't necessarily think that, the end of the world is coming. So you might have some people early on in the week stepping in and seeing this as a very big buy signal. What I'm going to just tell you is whether you agree with that or not, or you're like, no, this market's going to hell in a handbasket, whatever your opinions are, the fact of the matter is I think this 45.55 level, 45.63 level is going to be very, very important for the market. So watch that. The reason why this is going to be so important is you're going to go look, and because I'm going to show you some of the really key levels that the market's been at. Remember last week, go watch last week's week ahead video, and let's go back and talk about the dollar and what's happened with the euro, and let's go reference those charts. So last week in the dollar index, I don't know if you guys recall, I gave you a sandbox. You remember the sandbox? I said, hey, channel resistance in the dollar index. I was looking at this. I actually readjusted that a little bit late last week, but I still think this is your sandbox. Channel high to the channel low here. You want to play inside of that, and I think the dollar index on dips here is going to be bought. So if you find dips back down to the 94.80 level, 95 level, I think this is going to be where support comes in for the dollar index. And if you remember discussing the euro last week, when we were talking about the euro dollar, I was talking about the very important weekly support, multi-year support, right? High, hello, hi there, over there, hi. Just kidding. Sorry, I'm being a little goofy. It is over the weekend. This is the high. That's another high price. That's another high price. It's a high price, right? These are lows, so retesting. And now we retested this last week, 111.50. We went as low, I think, is 111.80. I have to double check that, but I think it's 111.86. Low, 111.86 was the low. And for those of you that were listening to the daily webinars, you guys probably know that I was long the euro. I actually sold it on Friday. So I was long the euro down here around the 112 area, just slightly above 112, and I sold everything, at 113. So, I'm playing that personally, and I think that 112 level is going to be bought on dips. Now, the reason why I'm gonna specifically tell you we're at some pretty key levels, because the euro just paused at a key level. But you know what else is getting really close to a level that you can go back and watch these week ahead videos from go 6 months ago, go a few months ago. And I've talked about the Aussie underperforming. I've talked about it a lot over the course of the last 6 months. And I'm like, yeah, the Aussie's underperforming. So as soon as stocks come under pressure, you're going to see the Aussie really come under pressure. Well, the stock market has gone a little bit further than I had anticipated. I've been looking at the market going, oh my gosh, I can't believe, we're still climbing. But what's been underperforming is the Aussie. So we are now approaching this, this is really critical 71-cent support. Now, we do have Aussie GDP later on this next week. I don't necessarily think that's going to be a mover. I think the risk appetite and risk aversion is going to be the mover. Now, if you go back several months ago and you ask my opinion of the Aussie, you can go watch the week ahead videos from back then. I've told you that any drop down to 70 cents and I want to be a buyer. Well, here we are. Here we are, and stocks are still up here, but now that they're turning lower, the question is, do you really want to be a buyer in the Aussie right around 70 cents? I would imagine a lot of people are trying to buy there. Now, I am going to, and I'm telling you right now ahead of time, unless the markets are completely, on its back. That's what I'm going to say. I'm going to refrain from saying anything else. I'm just going to say if the market's on its back. Anyway, if the market's on its back, does the S&P, drag down the Aussie even further than 70 cents? I've been wanting to buy the Aussie at 70 cents, so I am going to have to give it a whirl, meaning I'm going to have to be a buyer somewhere down there. But the fact of the matter is if the Aussie breaks through 70 cents, we could see lower levels, because let's just take a look at this, on a longer term basis. This is the post-COVID low right here. And guys, if you think you don't think there's anything else happening this week, there's a whole mess of stuff happening this next week. So don't go anywhere, because I need you to know everything that's happening this next week as far as data goes. And by the way, while I'm here, before I even get into the Aussie, if you guys like this analysis, please subscribe to the channel. It's free to subscribe to our YouTube channel. Make sure you give a thumbs up. It is the weekend, and myself and the editorial team are doing this video for you. So thumbs up goes a long way. Subscription, it's free, goes a long way as well. So please do both of that. Okay. All right. So we have this low here in the Aussie. Here's the high, right? And if you take a fib from the low to the high, you'll notice that the 38% retracement comes in right around 70, 75. Maybe even a little bit lower than that. It's probably just a wee bit lower than that, like 70, 50 is what I have been thinking in my head. So if we get below 70 cents, then the next level support might not be until about 68 cents. So I'm assuming so many people are going to try to buy at 70 cents, but if it breaks that, we should go lower. So the reason why I bring all this up is because, if you've been planning a trade for a long time, and there's a lot of trades, like I'll give you a perfect example. I had been waiting to buy the euro around the 112 level for the last year. So you can go watch these week ahead videos and go through them, go to where I talked about the euro long term, and you would know that over the last year I've been looking to buy the euro somewhere around the 112 level, 111, somewhere in this neighborhood. I bought it. I stepped in and I bought it. Now I'm going to buy the Aussie at 70 cents because it's something I've been talking about for a long time. Will I be right? I don't know. But what I do know is if we get much below 70 cents, we could actually trade down to 68 cents. And I can't ignore that. And therefore, if I go to buy something, I'm not going to be stubborn and just buy it and hold on to it until it eventually makes money. That's not trading. That's trading on hope, right? You're trading. You're hoping things work out. You turn into a religious trader and you start praying to God every night. No, we're traders. I know that if it gets much below 70 cents, we're probably going to see 68 cents again. I don't want to stick around for that. I'm just going to try to buy it at a cheaper price then. But I will probably stick my neck out and try to take that position because I do think it will at least give us a technical or tactical bounce off of those levels. Okay. Now let's discuss a few things that are happening this next week. But I wanted to point the Aussie out to you because I think it's so important. And by the way, if you've been following me with regarding ForexAnalytix on a daily basis, I mean the moves that we've seen, like in the dollar Mexican peso, a lot of you guys were long with me this last week. Hit the 127% extension, 261% extension right here above 22. I didn't think we'd get that far that quick, right? US dollar Norwegian krona, big break higher. A lot of us were long the US dollar Norwegian krona earlier this week. I've done really well with it. I did not think it was going to go this far either. But if you take a look at crude oil is below the 200-day moving average, and we're approaching this massive breakout. We're back below 70 for crying out loud. So there's so much happening. So make sure you are joining us on Monday morning on the F.A.C.E webinar, and hopefully you take a trial of ForexAnalytix. It's only $1, remember, for 10 days. Then you can join me for the Morning Edge with Steve and Stelios. Then the daily roundup. I'll catch you up before Asia starts and wrapping up the European session. So I'll see you guys there for sure. But next week there's a lot happening next week. Next week is the jobs report. Yeah, we have the jobs report next week, right? So we have the jobs report, but do you know how many Fed governors and not Fed, just central bankers are speaking next week. So not only do we have, like the jobs report next week, and by the way, we have Canadian GDP, Australian GDP. We have all the ISM and private payrolls components that come up before, the jobs report for the U.S. and for Canada next Friday. But Treasury Secretary Yellen is speaking. We got almost every FOMC member, previous, past, present. I'm just kidding about that. But we do have a lot of FOMC members speaking this next week. Lagarde speaking. We've got Bailey speaking next week. Powell testifies on the CARES Act in front of the House and the Senate. There is so much Fed speak next week, and we're all going to have to pay attention to what these guys and gals are saying because rates are a moving. And as a currency trader, you got to love it, right? That's what's creating volatility. And that's how we as traders make money, is when rates start moving. And so now expectations are moving because you got central bankers that are starting to speak their mind, and we're starting to move off the zero bound. So it's an exciting time to be a currency trader, guys. I know a lot of people have written off currency trading over the last couple of years. That's because rates have been at zero. But now that rates are starting to move again, the market's starting to move. So this is the best place to be, best market to be, and the best place to be trading this market is with ForexAnalytix. Remember, $1 for 10 days. Try us out. I'll see you guys on the flip side Monday morning on the F.A.C.E webinar. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.